What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is February 4th of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I want to spend some time to talk about why right here, right now in the market, we are experiencing the same market conditions we've only seen 2 times in the past during this bull market. And when we get into these conditions, it not only signals that we may be oversold in valuations, but that we've got serious upside to come for the preceding months ahead. So without further ado, let's go ahead and dive into it, guys. And I just want to ask that if you enjoy the video, consider liking, subscribing, hitting that bell icon so you guys don't miss another upload here on the channel, and consider leaving a comment down below whether you agree or disagree. I'd love to hear your guys' thoughts in the comments. All right, so I want to start with a catalyst here for the conversation. I want to start by a tweet that Willy Woo put out. He's one of the large data science modelists within the crypto space, and he put out a really interesting tweet that I think summarizes this conversation we're going to have in the video. He tweeted out that in price in relation to on-chain demand, right, the on-chain data we have for demand of cryptocurrencies from both speculative and hodl categories, so people who are more short-term thinkers and even those who have long-term mentalities when investing in crypto, are now both at peak oversold levels. The last time this happened was in October of 2020. The time before that was the bottom back in March during the COVID crash. So it's a pretty big, bold statement to say here, right? And I definitely understand for some people, they're like, no, there's more sell side to come. There's not max pain yet. We're in a bear market. We're going to 10K, right? Some of the people out there are calling for that. Well, I want to go ahead and just take a look at these on-chain metrics, go off of what Willy was saying, and try to see if we can find within the on-chain metrics, the data science models, which again, aren't foolproof, but they are definitely something we can use as a guiding principle to see where we've been in history in accordance to these models and where we are now. All right, so let's go ahead and take a look at one we've talked about here on the channel before, which is the Puell multiple. This again takes daily coin issuance, so every block reward coming out, what is the amount of Bitcoin being released on a daily basis, and what's the dollar value of that Bitcoin divided by the 365-day average of daily coin issuance, right? So when, for example, we're getting a heightened price, we're going to get a higher Puell multiple. So in this case back here, we could see here in March of 2021, even here back in July 2019, a very heightened level here. And as price generally increases and decreases, the multiple will increase or decline. Now, the big thing I want to emphasize, though, is that we've obviously got the kind of overbought range here that's usually above 4 all the way to 10, which is where we've seen some of our previous peaks, including the 2017 top, the 2013 and 2014 ones, and even back here in 2011. But as we can obviously see here, we didn't come up into that range here back in March. And this is, again, a big reason why we've talked about how we probably haven't seen a cycle top. And if anything, with how this cycle has been operating, we probably have at least a chance to come up here and test it a third time, even if we don't go into this red band. But I digress. I don't want to talk again about the overbought range. I want to talk about the discount range we're looking at, the statement that Willy Woo made. Are we at this discount range yet? Well, we're back down here in December 2021 here. And what you actually find within the Puell multiple is actually an even more optimistic statement, which is that we've actually seen this a couple more times in the cycle, but it doesn't challenge Willy Woo's statement in a sense. We had it back here during the correction in May and June, right? We had it back here as well, and as he was talking about in October of 2020, right before the spring up in price. We had it in the March correction here, even going down into green territory. But even though we haven't gotten as oversold as the March correction here in regards to price, where we had about a 75% price pullback in Bitcoin, we're down towards discount territory. This is, again, a general range where, again, as we saw, whether the market was generally proceeding with positive price action, like going into October, or coming out of fearful periods of time, afterwards we saw major spring ups in price. And we'll come back to the chart to talk about that a little bit. We can see up here, again, on the model they showcase, this was the March correction here as we entered into green territory. We also saw here as well in October when we hovered around this range for some time. This was the pre-catalyst here from the rally all the way up from around $10,000 to nearly $60,000, right? So let's go ahead and take a look here at the next one, which is the MVRV Z-score. Again, another favorite of ours here on the channel. It takes market cap, subtracts the realized cap, which is the measurement of all Bitcoins in the entire space of crypto, and what was the price that they were sitting at when they were last moved, right? Which is generally effectively known as realized cap. and dividing that by the standard deviation of market cap, okay? So how far away is it deviating, right? And we can see here that when market cap deviates too far from realized cap, or in this case, the difference between the two, right? We can start to see that this score will go up over time, right? It's effectively building a ratio, if you will, between these two values. And we can start to see again when this is in heightened levels, that's usually a signal of the market getting overheated, being overbought. And now we're down on the lower band here, which is the opposite. We're getting closer and closer to being in discount territory. Now, some people would argue you have to come down here to the green range here, right? This is usually something that, except for the March correction, where asset markets took a massive hit due to this crazy once-in-a-century type event that we saw, generally speaking, the green territory here is where bear market bottoms come in, right? We can see back here the 2011 bottom in the fall of 2011. We can see here as well, back here in 2015. We can see here in 2018, during December, during the absolute peak fear in the market. Right now, we're sitting here below 1. The last couple of times we were below 1 here was back here during the July correction, back here during September of 2020, right? So we're again at pretty good discount ranges here comparative to the overall sentiment in the market, right? We're not getting the kind of bear market decline here where you're getting generally 66 to 70% corrections from this kind of euphoric peak blow off top in the market. But instead, we've been generally consolidating sideways and just signals probably that we're at discount territory. And you can even see here in the past, even as we went through 2017, it still matches up much more with these ones back here where you have parabolic rises in the MVRV score and incredibly sharp declines. Whereas this time around, we don't have that major blow off top into the over exaggerated territory. And outside of that as well, we've been having much more signaled kind of confidence, holding a higher base here than the previous times. Usually we drop below the 1 point range here, but in reality, we've been holding around at this time. The next one I want to take a look at here, though, is the Fear and Greed Index charted over Bitcoin's price. This is one of the new data science models that's come to the space, and I think it's really good at helping to visualize when we're getting into the later half of corrections and when it's time to possibly look at buying opportunities in the market. It basically measures the sentiment of the market. When we get overtly greedy, the chart is generally more green, and the score usually hovers around the upper 80 to 90% range. Whereas when we enter into fear and capitulation and concerns, where there might be, in this case, obviously people selling, but generally tends to be a good discount opportunity for us to buy, it's usually when we're going down below the 20-point range. Now, what I would define as kind of peak greed is a score of 90 or over. On the other hand, peak fear would be around a 10-point range. And so just take a look at where we got to. The lowest point we got to was around 11 points, 11 to 12 points, give or take on the day, around the later part of January. I'm going to go ahead and I want to scan through the chart here. We can see back here, for example, this pullback, we didn't see it. Back here, on the other hand, we did get a 10-point score. I'll see if I can get the exact day here. Kind of scan the chart a bit. I might not be able to get it. I think you guys must, there we go. May 30th, right? So again, generally multiple days around that range. It's not about exactly hitting that point, right? We didn't hit 10 over here, we hit 11. But I digress on it. The major point here is that when we have multiple days trading in these ranges, there are really only few opportunities where we see Bitcoin's price correct like this, right? And even during a bear market, right, you're usually not going to get those 10-point scores and stuff if we take a look back throughout history. It's generally going to be during these periods of time where Bitcoin is just oversold, that the sentiment is just too negative in the market for the justifiable demand that's going on, right? And it's generally a point where smart money, or those corporate treasurers, and we'll talk about that later, people come in and buy positions. They buy heavier on these discounts. Now, the last thing I wanted to talk about here in regards to the kind of data science models is the Mayer multiple. Mayer multiple is one of the oldest standing ways to analyze the crypto markets, one of the oldest data science models from, I think it's Chase Mayer. Basically, the key thing here to understand is that when we're getting around this kind of range where we're at now, around the 70, near the 75-point range like we saw back here back a couple of days ago, the Mayer multiple saw a similar range back here in July of 2021 when we started to recover in price. Same range here, right? We went a little bit lower, of course, as it was more dramatic sell side and a little bit more capitulation and fear. Back here in the March 2020 correction. We saw it back here as well at the bottom of the bear market, right? So we can see that this is a range here where it's not time to get absolutely fearful. It's time to start flipping the tone, start getting more optimistic. And again, taking a look back at price here, what we find is that as a summary, to Willy Woo's point, the vast majority of the data science models out there usually point to discount opportunities in the market being at the typical ranges. And all we got to do is just zoom out. We find that a lot of the models were highlighting that this was a buy range. We find that a lot of models were highlighting that even during a time of price recovery, right, back here in October, that the on-chain metrics signaled that price had room to grow, right? We had here oversold territory in March of 2020, and even back here in December 2018. Data science models aren't perfect, right? Just like how no one out there can do perfect technical analysis in the market, and no indicator is an absolute end-all be-all metric, but it has helped us time and time again to know when discount opportunities arise. And if you generally know the percentage ranges to look for, the over 40, 50, 60% corrections you can get in the market, usually around 50, 55%. When you get to that range, if you can build the habitual habit of buying into the market and getting exposure and a discount, it's just like going to buy products or services that you want, right? It's best to pay a discount for them, right? Pay at a discount rate versus buying the brand new first kind of premier price you're going to get on any given thing, especially when it's all hot. When people are wanting to buy something, buying it at all-time highs, you have to go against your psychology in this case and buy when no one's talking about it, right? Now, one last thing I wanted to talk about, and again, I know a lot of people have been emphasizing this kind of discussion point of, Nick, I constantly am hearing about these concerns from the Fed, this and that. We've talked about that here on the channel. And they're asking, what's the next catalyst to drive up Bitcoin's price in the long term? And again, there's a lot of discussion points we could talk about here about what could drive Bitcoin's price. But what I think we're going to see here over the next coming months is with this discount opportunity in price, the two things that drove the earlier part of the cycle here. We're going to see more corporate treasuries start to allocate to Bitcoin. They're not going to do this. We talked about this extensively, that they're not going to be buying Bitcoin at 65K. They're not going to, because if they get an opportunity to get that at half a discount, the higher chances that they're going to want to come in and build a position, right? They have more growth potential, at least according to history, and the potential as well to make new all-time highs. That's what a corporate treasury really cares about. They're not going to allocate buying at all-time highs. They're going to buy when no one's talking about it. And that's exactly what we've been seeing with on-chain metrics. We've been seeing not only independent investors, right, that are starting to accumulate here on these lows. We're seeing a lot of interesting wallet addresses where people, again, have just been stacking 300, 500 Bitcoin on a daily basis. But what I think you're going to see here, which we haven't seen just yet, is we're going to see an increase in the ETF and corporate treasury holdings. This is, again, another chart from Willy Woo here, where we're seeing here, and this is the really fascinating thing, that price has declined here during this period of time, but the ETF corporate holdings here have not, right? ETF holdings, relatively neutral here. The only thing that's been really going on is that Grayscale as a company has started to slowly offload a little bit of Bitcoin each and every week because there's a negative premium, right? Meaning that right now for the ETF, and this is pretty typical, especially the way that it works and how much Bitcoin they stacked in, it's probably going to have a negative premium because of the fact that there's just too much Bitcoin shares that are generated for the Grayscale ETN product, right? And they have to slowly get back to an equilibrium with supply and demand so that premium gets back to neutral territory. And it usually goes into positive territory when there's a lot of buy-side demand. And we can see here as well for the corporates, right? Mainly driven, honestly, by MicroStrategy. We can even pull that up here. I think you guys will see MicroStrategy really making up about a little over half of that demand, right? Corporate treasury holdings continue to climb up. Not as dramatic as people probably thought back in 2020, 2021. But I think we're going to see a pretty big kick up here in the next coming months, where corporate treasurers will start to come in, buy on this discount, get more excited about exposure to crypto, and with inflationary pressures continuing to grow, it's just going to continue to be more in demand. So as time progresses, we'll see if I hold out right on that or not. I don't want to try to oversell it to you guys. Case in point, though, is when we take a look at the Onchametrics, they're not selling. They're holding. They have that long-term mentality. And whether we're taking a look at the metrics for speculators, for long-term holders, we're seeing generally the price is setting up the framework for a higher move in the near-term future. Doesn't have to be parabolic. We're first going to have to get back up to where we were before, right? From, again, those smart money buyers coming in, buying around this 30K range, driving the price up to 60. And then you have the mania rally. You press out to new all-time highs. People get excited about it. They start taking on more risk, and price starts to climb higher and higher into that 6-digit territory that we know we're going to be able to reach above 100K. Going on to possibly 150K, 200K, you name it. So if you're in it for the journey, if you don't have anywhere else to be over the next year when it comes to investing, I know where I'm positioned, and I want to put my money where my mouth is. All right? If I was worried about the market, guys, I'll be completely candid with you all. We've been here during bull and bear markets. We've seen what it looks like on either side of the trade. And I'm not going to expose myself simply because I just love crypto. Look, crypto is an asset class. I'll sell it if I feel the need to. But right now, there's no reason to. In fact, even if it's that we expect just a short-term rebound and that we are in some kind of bear market, I certainly wouldn't sell into peak fear. So anyways, guys, I hope you enjoyed this video. If you liked it, please consider dropping a like, consider subscribing if you like this kind of content here, and leave a comment down below what you think about it. Whether you agree or disagree, it's totally fine. Let's get a conversation going. I want to hear from you guys, and thank you so much for giving me some time out of your day. I'll see you all in the next video. Take care, everyone.